Dear students, very good one to all. Subject Financial Accounting 1 to first semester BCom students as per the choice based credit system. So, this textbook is written by Professor Karunakar Nayak A, and also we are going to do some more problems in other textbook also. Myself, I am Vinay Kumar. So we learned a few things regarding depreciation, method of depreciation. The various methods are straight line method, diminishing balance method, annuity method, and then a depreciation fund method in the last class. So for the purpose of examination, we may expect the problems towards a depreciation in the form of straight line method and as well as diminishing balance method. We done the few problems under straight line method also. Under the straight line method, a fixed amount of depreciation which is deducted from the machinery every year. So one problem also we done earlier. Here in this problem we are doing a depreciation under diminishing balance method. So what is the difference between a straight line method and as well as a diminishing balance method? Here also the rate of interest or the amount of depreciation which is given in the problem, we need to deduct that depreciation amount every year from the machinery, right? So how we are going to calculate the depreciation? We are calculate the depreciation on the remaining balance amount. For example, out of 4 lakh in the first year we are deduct the depreciation of 10,000, the remaining 3 lakh 90,000. So in second year we are going to calculate the depreciation on 3 lakh 90,000. That is the procedure we are following, right? So anyway, we will do the problem. So under this problem, a firm, so the name which is not given, on 1st April 2014 they went to brought a machinery at rupees 90,000, and also they spent 10,000 rupees for the purpose of carriage and installation. So this is one more changes. So for 90,000 you need to add 10,000 for cost. Okay, that will be the cost of machinery. So the 90,000 is not the value of machinery. So 90,000 plus 10,000. So 1 lakh rupee should be the cost of machinery, right? On 1st April 2016, again they went on purchase an additional machinery for rupees 50,000, and then in 1st October, right, 2016, they sold those machinery for rupees 80,000, and again in 1st April 2017 they purchased another machine for rupees 50,000. This is the information given, and they told depreciation is to be charged at 10% per annum under diminishing balance method. So which method we are following? We are methoding diminishing balance method, and also called as sinking fund method, reducing balance method, like that we are calling. So which ledger they need to do? We need to do a machinery account and also the depreciation account. For how long we need to prepare? For 4 years. So for any problem you are doing under depreciation account, first you need to take the note. Okay, so when you purchase the machinery, when the purchase is selling, so date as well as amount. As usual, 1st April 2014 1 lakh, 1st April 2016 50,000, 1st for 2017 50,000, and 1st October 2016 the amount of 80,000 of machinery will be sold. This is the information. So for any machinery you are selling, there is a requirement of calculation. For selling those machinery, is it the organization is getting profit or loss? So that should be find out. The calculation is like this. The cost of machinery, this is the first machinery we purchased on 1st April 2014, that is 1 lakh. For that 10% of it should be the depreciation. 1 lakh into 10 by 100, that is 10,000. The remaining amount is 90,000. Again in second year, for that means for 90,000 the depreciation is 90,000 into 10 by 100, 9,000. Again we deduct that 9,000, 81,000 we are getting. In the third year, sorry, in the fourth year, we are selling those machinery. Okay, for that 81,000 into 10 by 100. So that machinery is selling on 1st October. So consider the accounting year is 31st 3 to 14. So April, May, June, July, August, September. Okay, we are selling on October 1. That means up to September we are going to consider the depreciation. So 81,000 into 10 by 100 into 6 by 12. You are getting 4,050. We will deduct 76,950. Then we are selling those machinery. For how much we are selling? So the value of machinery, the cost of the machinery is 76,950. We are selling for 80,000. Oh, definitely we are getting the profit. So 76,950 minus 80,000, that is 3,050 is the profit on sale of machinery. This is rare case. Okay, so we are not going to get the profit regularly, but once upon a time there is some time there is the value of the machinery may be increasing. So here in this problem we are getting 3,050 as a profit towards the selling of machinery. What should be the journal entry? For that we are getting profit now, so that's why we should credit profit and loss account. So entry should be for both selling and as well as getting the profit towards it. Bank account data 80,000, to machinery account 76,950, to profit and loss account 3,050. This is the compound journal entry. Again we are going to consider this journal entry to the ledger. This is the ledger we are doing. See, on 1st April 2014, what we are doing? We are purchasing the machinery. So machinery account data, to bank account 1 lakh. For 1 lakh at the end of the year, that is 31st 3, we are considering the depreciation. So 1 lakh into 10 by 100, 10,000. So by depreciation account is 10,000. If you want the journal entry, take down depreciation account data to machinery account. So depreciation in credit side, no. So that's why by machinery it is in credit side. So that's why by depreciation account on the credit side 10,000. So we deduct it. So 1 lakh minus 10,000, 90,000 is the balance. Again we carry forward to the next year. So in next year on 1st April 2015, to balance brought down should be 90,000. For that we are calculate the depreciation. 90,000 into 10 by 100, 9,000 should be depreciation. On which date? 31st 3 2016. So by depreciation account 9,000. So out of 90,000 we deduct the 9,000, 81,000 is the balance. Again we carry forward that amount to the next year. To balance brought down is 81,000. So here, so there is a requirement of some calculation which is already we done, right? On 1st April 2016, again we went for a purchase for 50,000 of the value of the machinery. The entry machinery account data to bank account 50,000. We are getting the profit towards the selling of machinery. Okay, for rupees 80,000. So that is the profit. The entry, what should be the entry we have taken earlier? So machinery account data to profit and loss account. So left side to profit and loss account on which date 1st October 2016. How much for profit we are getting? 3050. For that again there is a requirement of another journal entry for selling bank account data to machinery account by bank account 81,000. So now we went to the machinery, depreciation on machinery. For the selling machineries depreciation is 4050, that is calculated. So again see here 50,000 we are purchased on 1 April. So first 1 April 2016 up to 31st 3 2017 there is a 12 month. So 1 year we are going to calculate the depreciation for 50,000. So that is 5,000. Okay, now we get the information towards it. So 4,050 plus 5,000, 9,050 is the total depreciation of that year. Okay, so out of 1,34,050 we deduct 80,000, 9,050, then we getting the 45,000. So again we carry forward those amount to the next year. 45,000 is to balance brought down. Now again we are purchased one more machinery on 1st April 2017. So to bank account 50,000. For these two we required a depreciation. Come to right hand side 31st 3 2015 by depreciation account for first remaining balance 45,000 for 10%, 45,000 into 10 by 100, 4,500. For second machinery 50,000 into 10 by 100, 5,000. So totally 9,500 is the total depreciation on fourth year. Again the balance is 85,500. Carry forward those amount to the next year. So this is the calculation towards machinery account. ಸೊ ಈ ಪ್ರಾಬ್ಲಮ್ನಲ್ಲಿ ನಾವು ಡಿಮಿನಿಷಿಂಗ್ ಬ್ಯಾಲೆನ್ಸ್ ಮೆಥಡ್ನ ನಾವು ಫಾಲೋ ಮಾಡ್ತಾ ಇದ್ದೀವಿ. ಸೊ ಮೊದಲನೇದಾಗಿ ಎಲ್ಲ ಇನ್ಫಾರ್ಮೇಷನ್ ಯಾವ್ಯಾವ ಡೇಟ್ನಲ್ಲಿ ಪರ್ಚೇಸ್ ಮಾಡಿದ್ದೀವಿ ಮಿಷಿನರಿನ, ಯಾವ ಡೇಟಲ್ಲಿ ಸೇಲ್ ಮಾಡಿದ್ದೀವಿ ಎಲ್ಲನೂ ಬರ್ಕೋಬೇಕು. ಮತ್ತು ಲೆಕ್ಕದಲ್ಲಿ ನೀವು ಅಕೌಂಟಿಂಗ್ ಇಯರ್ ಯಾವುದು ಅನ್ನೋದನ್ನ ಮೊದಲು ಕನ್ಸಿಡರ್ ಮಾಡ್ಕೋಬೇಕು. ಸೊ 1st ಏಪ್ರಿಲಿಂದ ಶುರು ಆದರೆ 31st 3ಗೆ ಕ್ಲೋಸ್ ಆಗುತ್ತೆ ಅಕೌಂಟಿಂಗ್ ಇಯರ್. ಸೊ ಆ ಡೇಟ್ಗಳನ್ನ ನೀವು ಕನ್ಸಿಡರ್ ಮಾಡ್ಕೋಬೇಕು. ಸೊ 1 ವರ್ಷ ಪೂರ್ತಿ ಮಿಷಿನರಿ ನಿಮ್ಮ ಹತ್ರ ಇದ್ದರೆ ಫುಲ್ಲು 10% ಡಿಪ್ರಿಸಿಯೇಷನ್ನ ಕ್ಯಾಲ್ಕುಲೇಟ್ ಮಾಡಬೇಕು ಮೊದಲನೇ ವರ್ಷ. ಎರಡನೇ ವರ್ಷ ಆ 10%ನ ಕಳ್ಕೊಂಡು ಬಂದಿರೋ ಅಮೌಂಟ್ ಮೇಲೆ ಡಿಪ್ರಿಸಿಯೇಷನ್ ಮಾಡ್ಕೋಬೇಕು. ಸೊ ಅಂಥ ಮೆಥಡ್ನ ನಾವೇನಂತ ಕರಿತೀವಿ? ಡಿಮಿನಿಷಿಂಗ್ ಬ್ಯಾಲೆನ್ಸ್ ಮೆಥಡ್ ಅಂತ ಕರಿತೀವಿ. ಈ ಲೆಕ್ಕದಲ್ಲೂ ಅಷ್ಟೇ ಮೊದಲನೇ ವರ್ಷ 1 ಲಕ್ಷದಷ್ಟು ಮಿಷಿನರಿ ತಗೊಂಡಿದ್ವು. ವರ್ಷ ಪೂರ್ತಿ ಇದ್ದಿದ್ದರಿಂದ ಪೂರ್ತಿ 10% ಡಿಡಕ್ಟ್ ಮಾಡಿದ್ವಿ ಡಿಪ್ರಿಸಿಯೇಷನ್ನ. ಎರಡನೇ ವರ್ಷಕ್ಕೆ ಅದೇ ಥರ ಕ್ಯಾರಿ ಫಾರ್ವರ್ಡ್ ಮಾಡ್ಕೊಂಡು ಹೋದ್ವು. ಮೂರನೇ ವರ್ಷದಲ್ಲಿ ಏನಾಯಿತು, 1 ಲಕ್ಷ ರುಪೀಸ್ ಅಷ್ಟು ನಮ್ಮ ಹತ್ರ ಇದ್ದ ಮಿಷಿನರಿನ ಏನು ಮಾಡ್ತೀವಿ, ಸೇಲ್ ಮಾಡಿಬಿಟ್ಟಿದ್ದೀವಿ 80,000ಕ್ಕೆ. ಸೊ ಅದರಿಂದ ನಮಗೆ ಪ್ರಾಫಿಟ್ ಬಂತು. ಅದನ್ನು ಎಡಗಡೆ 3,050 ಬರೆದಿದ್ದೀವಿ. ಸೊ ಅದಕ್ಕೆ ಡಿಪ್ರಿಸಿಯೇಷನ್ನ ಕ್ಯಾಲ್ಕುಲೇಟ್ ಮಾಡಿ ಡಿಪ್ರಿಸಿಯೇಷನ್ನ ಡಿಡಕ್ಟ್ ಮಾಡಿದ್ದೀವಿ. ಮೂರನೇ ವರ್ಷದಲ್ಲಿ ಒಂದು ಹೊಸ ಮಿಷಿನರಿನ ಕೊಂಡುಕೊಂಡು ಆ ಮಿಷಿನರಿ ನಾವು ವರ್ಷ ಪೂರ್ತಿ ನಮ್ಮ ಹತ್ರನೇ ಇದ್ದದ್ರಿಂದ 10%, ಸೊ 50,000 ಇಂಟು 10/100 ಅಂದರೆ 5,000ದಷ್ಟು ಡಿಪ್ರಿಸಿಯೇಷನ್ನ ತೆಗೆದಿದ್ದೀವಿ. ಮುಂದಿನ ವರ್ಷ ಅದನ್ನು ಕ್ಯಾರಿ ಫಾರ್ವರ್ಡ್ ಮಾಡಿದ್ದೀವಿ. ಸೊ ಬಂದಿರೋ ಬ್ಯಾಲೆನ್ಸ್ ಅಮೌಂಟ್ ಮೇಲೆ ಡಿಪ್ರಿಸಿಯೇಷನ್ ತೆಗೆದಿದ್ದೀವಿ. ಹೊಸ ಮಿಷಿನರಿ ಬಂದರೆ ಅದಕ್ಕೂ ನಾವು ಡಿಪ್ರಿಸಿಯೇಷನ್ ತೆಗೆದಿದ್ದೀವಿ. ಸೊ ಈ ರೀತಿ ಪ್ರೊಸೀಜರ್ನ ನಾವು ಫಾಲೋ ಮಾಡಿದ್ದೀವಿ. ಸೊ ಅನದರ್ ಒನ್ ಈಸ್ ಡಿಪ್ರಿಸಿಯೇಷನ್ ಅಕೌಂಟ್. ಸೊ ಓನ್ಲಿ ದ 2 ledger which is required under this chapter. One is machinery account, another one is depreciation. Again for this the general journal entry is depreciation account data to machinery account. Depreciation which ledger we are following? We are doing depreciation account. So depreciation account data on the left hand side to machinery account. How much? 10,000. So there is no other entry. So 10,000 should be transferred to the profit and loss account. So the journal entry is profit and loss account data to depreciation. So by profit and loss account 10,000, right? So both the amount are tally. Again in second year 9,000 depreciation and we transfer to P&L account, and third year also 9,050 depreciation transfer to P&L account, and fourth year also 9,500 depreciation and transfer to P&L account. So thank you for watching.